but it was impossible. The flow too illy, too sick, too hospital. Be careful who you in because the end result will rot your bones. I hold no grudges, just loving on the microphone. When you enter my life, I hope you leave better. Not to mention filled up and fully loaded pressure. Don't come, but I know you'll overcome. Why am I so confident? All of heaven got my back. I know what the bottom look like, it ain't rocking. I know how it feel to be alone, ain't popping. The flip side is a whole nother option, and that's the side I'm living on. Doing more than talking. What's up? I know what the bottom look like, it ain't rocking. I know how it feel to be alone, ain't popping. The flip side is a whole nother option, and that's the side I'm living on.
Welcome back to the channel, all you crypto hooligans. It is July 8th, 8:55 p.m. Bitcoin appears to have broken its ascending triangle to the downside. How y'all doing tonight? Welcome back to the channel. Hit the like button for me on the way in. Subscribe and, don't get left out in the dark. So today, we are covering some major news today, but before we dive into the fundamentals, I wanted to touch base on some of the technical analysis going on in the charts today. So Bitcoin has broken its, its squeezing motion through this ascending triangle across the crypto space. It isn't the only one. Many of the cryptos out there, altcoins and stuff, are just getting squeezed and breaking major support lines. So you can see here the resistance is the 200-week EMA is acting as resistance, squeezing Vechain through this ascending triangle. Polkadot has also seen some major breaking of resistance just moments ago in this ascending triangle. I know this chart looks a little crazy, but we've had just some chaotic momentum going on. We had this downward bearish angle here, which represented sort of a downward squeezing motion. We had this support line here at around $15.05. We broke up through we went right through it on the way down, busted up through it, went back down through the resistance again, broke up, and then, actually landed on it for support. But that didn't last very long. We went up to the top of the triangle, broke out briefly at the top of this angle here, and then straight down to the bottom of the triangle. So right now we are currently breaking that zone and breaking that resistance, that previous support that we had tested as support earlier. So definitely some further downside in the very near future. I do not think that this is indicative of a bear market, I'm not that bearish yet, but I will say that the chart is looking pretty nasty today. I do think a lot of this is related to some Chinese stuff going on again out there in the Far East. So I'm going to start with Bitcoin like I always do, because Bitcoin obviously is the market driver, and the DXY currently is experiencing some resistance at the, let me just pull this down for you here. So on the weekly chart, we can see the DXY testing some resistance right now at the 200-week SMA. So I don't know what's going to happen here. It looks like it's struggling to get through there, but it will also have to break through the 50-week there at the top. So I think this could be good for Bitcoin if we see some further downside on the DXY, on the Dixie. It could help Bitcoin recover from some of these downward spirals that the market is experiencing right now. So, Bitcoin whale movement signal crypto market bottom is in, says OnChain-Analyst Willie Wu. So new data on the amount of Bitcoin being scooped up by crypto whales and retail traders signals the bottom is in, according to Willie Wu. Wu is taking a close look at the flow of Bitcoin to and from crypto exchanges. He says despite sideways price action, investors appear to be buying coins on exchanges and sending them to private wallets at a healthy pace. As price grinds sideways, bearish coins are being scooped off the exchanges at a very bullish rate. The latest sizing of withdrawals versus deposits are at local highs at levels that signal a bottom, and that whales are scooping. So as we can see here, the spot exchange net flows are showing that the price is currently just trending sideways, but the amount of Bitcoin on exchanges has hit an all-time low. We weren't this low since back in November of 2020. November of 2020. So Wu says the numbers imply a supply shock is underway, with demand for Bitcoin steadily outpacing the amount available on the market. So again, and we talked about this in the video yesterday, the technicals are showing, bearish signals, but the fundamentals are showing serious bullish stuff going on. So, I'm just going to say that, the markets are volatile, right? This is crypto, and the markets are going to be volatile. So, but if you look at the fundamentals and understand that the supply is running really, really low, economics 101, right? The price must go higher as demand increases. So in the Wall Street Journal today, cryptocurrency giant Binance.us hires former top bank regulator. As you guys know, Binance has been experiencing blacklisting from a number of different banks and financial providers across the globe. So Brian Brooks, an acting head of office of the comptroller of the currency under Trump, will become CEO of Binance.us. So surprising news. So a former top U.S. banking regulator is set to join Binance.us, one of the world's biggest Bitcoin exchanges, in the latest move by a cryptocurrency company to deepen its ties to Washington. Brian Brooks, an acting head of the Office of the Comptroller of the Currency under the Trump administration, will become the new chief executive of Binance.us, the U.S. affiliate of overseas crypto exchange giant Binance Holdings, Ltd. Mr. Brooks said in an interview that he would start the job May 1st. A spokesman for the crypto exchange confirmed the hire. So this is pretty interesting news for Binance.us. More bullish news for Bitcoin. Argentine lawmaker proposes bill to allow employees to receive their salaries in Bitcoin. Jose Luis Ramon, a member of the lower house of the Argentine National Congress, has submitted a bill that would allow workers to choose to receive part or the whole of their salaries in Bitcoin and other cryptos. Ramon said in a tweet on Tuesday that his proposed crypto bill would apply to anyone working as an exporter of services and also to those who depend on an employer for income. He further suggested that the proposal has the potential to increase the financial freedom of employees and protect their purchasing power. So he went on to say, the idea is that workers can strengthen their autonomy and retain the purchasing power of their remuneration. Remuneration. This initiative stems from the need to promote greater autonomy and governance of wages, without this implying a loss of rights or exposure to situations of abuse within the framework of the employment relationship. The Argentine government compelled service exporters to convert their income from dollars to Argentine pesos through an exchange channel in 2019. However, the proposed bill would ensure that overseas workers need not convert their earnings to peso after returning home, considering the fact that the native Argentine peso suffers inflation of 50% annually. Argentina is highly placed in grassroots cryptocurrency adoption alongside other Latin American countries. The country will not be the first to implement such an initiative. In February, Miami passed a resolution allowing municipal employees to receive their salaries in Bitcoin. So very, very bullish news for Bitcoin and other cryptocurrencies. Mass adoption is spreading across the globe like wildfire while the markets continue to fall. What could be driving these markets down in the midst of all this bullishness? It's hard to say, but China has been taking another stab at cryptocurrency. So China is taking measures against a group of altcoins, says they could endanger global monetary system, or more appropriately, their digital yuan. China is sounding the alarm on crypto assets that are pegged to fiat currencies. The country's leading banking official says that such stablecoins pose a risk to the global monetary and payment system, according to a CNBC report. The report quotes the deputy governor of the People's Bank of China, Fan Yifei, who says that some measures have been taken to contain the risks and challenges posed by privately issued global stablecoins. So the report further states that the PBOC's deputy governors views decentralized cryptocurrencies as speculative financial instruments that could destabilize financial security and society at large. These digital currencies have themselves become speculation tools. Yifei's statement coincides with China's continuing crackdown on Bitcoin mining and the imposition of restrictions on crypto trading-related businesses. China's efforts to promote its central bank digital currency, the digital yuan, however, continue to gain steam. China's war on Bitcoin just hit a new level with its latest crypto crackdown. So I do believe that this is probably one of the main reasons for this further downside in the market, despite all of this bullish fundamentals going on. China's central bank said Tuesday it had called for the shutdown of a company that was suspected of providing software services for virtual currency transactions. For years, China has signaled that it wanted to ban Bitcoin. Beijing could be looking to stem capital outflows via stablecoins and cryptocurrencies. So the statement issued by the Beijing office of the People's Bank of China warned institutions not to provide other services related to virtual currency, including providing business premises or marketing. Lashing out against digital currencies is nothing new for the authoritarian state. In 2013, the country ordered third-party payment providers to stop using Bitcoin. Chinese authorities put a stop to token sales in 2017 and pledged to continue to target crypto exchanges in 2019. But typically, each time Beijing has lashed out at the crypto industry, the sting has worn off and the rules eventually softened. This time, however, appears to be different. In May, China banned financial institutions and payment companies from providing crypto-related services. In June, there were mass arrests in China of people suspecting of using cryptocurrencies in nefarious ways. At That same month, regulators dialed up the pressure on banks and payment businesses to stop providing cryptocurrency services, and Weibo, the Twitter of China, suspended crypto-related accounts. As of July, half the world's Bitcoin miners have now gone dark following Beijing's call for a severe crackdown on Bitcoin mining and trading. China's government is doing everything they can to ensure that Bitcoin and other cryptocurrencies disappear from the Chinese financial landscape. So, why China has essentially declared war on cryptocurrencies in 2021? We're all wondering, said Nick Carter, founding partner at Castle Island Ventures. One theory is that it's part of a broader law and order push ahead of the 100th anniversary of the Chinese Communist Party this year. They're cracking down on all sorts of undesirable behavior. Crypto has long been synonymous with crime on the mainland. The largest ever Ponzi in crypto was likely Plus Token, which was a Chinese project. In that scheme, scammers swindled $5.7 billion from investors, and dozens were arrested. That will be lingering in their memory for some time. Another theory is that China is clearing the runway for its own digital yuan, a central bank digital currency that's been in development since 2014. Part of this is to ensure the adoption of Chinese central bank digital currency, and part of this is most probably to ensure financial surveillance activities are able to see all economic activity. So the digital yuan could theoretically enable the government greater power to track spending in real time. The most likely motivator, according to Carter, is that Beijing is looking to stem capital outflows via stablecoins and cryptocurrency, basically choking off the flow of yuan to crypto. So China strangling the outflow of any yuan moving out of the country. So major control issues in China. So I do think that this sort of FUD scares investors, and probably this is what we're seeing in the market right now. So I do not think that this is a fundamental breakdown of the Bitcoin bull market or the crypto bull market, but I do think that we're going to see some, investors are just very, very fearful. So let's take a look at the fear and greed index and see where we are today. So right now we're sitting at around 32. So still in the red zone for fear. I'm surprised this isn't much higher actually right now, but so 1 week ago we were neutral, 1 month ago we were neutral, and 1 year ago today we were neutral still. So the market is definitely more fearful. So I think all markets are just experiencing, much more volatility these days. So even ADA has been, on the verge of breaking down. So as we can see here, ADA has been resting on the 25 moving average, holding it as support. However, it just recently broke major support line at $1.38. So the next line of major support comes in at around $1.35 or $1.36, $1.35.7. So we do have we have a lot of support below us here, with all of the amount of Cardano being staked right now. It's just holding much more stable than a lot of these other coins are. So ADA is about just about 60 days from launching their Alonzo phase. So we're just about there for Cardano to have full smart contract functionality. The market has been in anticipation, waiting for this rollout. Charles Hoskinson received a bunch of negative attacks on Twitter yesterday, but he did go on to point out that there are plenty of adoption on the Cardano mainnet, and many dApps are planning to move over to the Cardano platform once smart contracts are released. So I think people are going to hate on Cardano because everybody's sort of amped up with Ethereum with the rollout of their 1559 protocol. But, what I think is going to happen is that the Ethereum 1559 is supposed to release prior to the final implementation of smart contract functionality on Cardano. So we'll probably see a big push in Ethereum in the coming weeks. And then, hopefully a lot of that revenue will move its way over to Cardano afterwards. So I would definitely keep an eye on that. Shiba Swap. Shiba Inu's new DEX, Shiba Swap, has captured $1.5 billion locked up in 2 days. The platform bumps Ethereum fees even higher. The crypto asset Shiba Inu now has a decentralized exchange platform called Shiba Swap, and since the trading protocol's launch, the DEX has $1.5 billion total value locked. The Shiba fueled DEX has a lot more liquidity than most platforms today, as Shiba Swap has been catching up to popular DEX platforms like PancakeSwap and Sushi Swap. So Shiba was just launched on Tuesday. It is Thursday. So in just 2 days, it is moving up onto, approaching the same value locked as PancakeSwap and Sushi Swap. So this is really huge for the SHIB community. The Shiba Inu project has a huge community. I mean, I am a member of their Discord. I've been, following them on Twitter. I am a huge supporter of this project. I think a lot of people were talking tons of smack about this project as a joke coin, a meme coin, but their white paper right from the very beginning said that, while they could technically be called a meme coin, their goal is not to remain so. Their roadmap for development is quite extensive, which includes NFTs, their own platform called Shibarium, their DEX, Shiba Swap, staking. You can bury tokens on the Shiba Swap platform. So there's a lot of hype around this project, and I do believe that today is a great price to jump in. So I think I'm going to do that. So just remember, this is not financial advice. I am not a financial advisor. I am just a YouTuber who loves cryptocurrency and loves talking about it. I do have trading experience. I am educated with an MBA, but I am not a financial advisor here. I will say, though, Shiba is destined for the moon. So more bullish fundamentals. Bank of America reportedly establishes crypto research team. Candace Browning, the bank's head of global research, described cryptocurrency as one of the fastest growing emerging technology ecosystems. A new team at the second largest bank in the United States will reportedly be devoted entirely to researching cryptocurrencies. According to a Thursday Bloomberg report, Alkesh Shah from Bank of America's Data and Innovation Strategy Group will be leading a team looking into digital assets. He, along with Mamta Jain and Andrew Moss of Bank of America Merrill Lynch's Digital Innovation Group, will be reporting to Michael Maris, who reportedly oversees global currencies and commodities research. Cryptocurrencies and digital assets constitute one of the fastest growing emergency technology ecosystems, said Candace Browning. We are uniquely positioned to provide thought leadership due to our strong industry research analysis, market-leading global payments platform, and our blockchain expertise. Some Bank of America analysts have criticized cryptocurrencies like Bitcoin for their volatility, while CEO Brian Moynihan testified before the U.S. Senate Banking Committee in May. He said, "We do not lend against cryptocurrencies and do not bank companies whose primary business is cryptocurrency or the facilitation of cryptocurrency trading and investment." Very strange. Here we are about a month and a half later, and they are developing a whole team devoted to it. So hard to say what the real story is. However, the bank has taken some small steps seemingly towards adoption in recent months. In May, a report claimed that the bank had joined the Paxos settlement service, which would allow customers to use blockchain technology to settle stock trades. So, yeah, Bank of America, here they come. So yeah, that's all the fundamental news I have for you guys today. In the markets, we are looking at the U.S. dollar is breaking that moving average. So I do not foresee this to be good for Bitcoin if that continues to break the moving average there. So yeah, not looking too good as the DXY. I don't know. It looks like we're sort of rolling over here. The trend has been downward for the US dollar. So this little pump right here has caused so much downward momentum, or at least helped facilitate the downward momentum in Bitcoin. There is an inverse relationship between Bitcoin and the Dixie. So as the Dixie is going up, Bitcoin goes down. As Bitcoin goes down, the Dixie goes up. So Dogecoin down at 19 cents, just a flat spiral down to the earth. This is a clear gravity check by the Dogecoin. So, considering the amount of supply that is generated every single day, more than 10,000 coins are minted every single day on the Dogecoin network. And with so little buyers buying, that supply is just going to continue to grow. So I'm not really sure. I do feel like this coin is just going to get sucked into a vacuum and really just implode on itself. It's unfortunate because I know a lot of people kind of jumped in on the hype on this coin, but just looking pretty crappy these days. Solana looking really, really strong. It just looks like it hasn't even been affected at all by this recent bearish trend. Just moving sideways, hunky dory, nothing really happening. I think Solana and ADA just really look like the two strongest market movers right now. The Elrond chart is not working for some reason. I don't know why. Study error. Here we go. Elrond is also looking really strong, but it is, down pretty far from its all-time high at 241. We are currently down 64% after a drop down 80% in price. So $85, it was back in October of 2020, it was only $9, $8. So, but still, it's nice to see it kind of sitting pretty up there, even though it is down 85%. So yeah, maybe a good time to pick up some Elrond. So 1 inch just looking flat. Down at 243. Uniswap looking pretty steady at 1997. Vechain down just around 7 cents. So Vechain, I do think that we've been in this upward channel here, since the beginning of the bull market, and we are fast approaching that trend line. So we're in this descending triangle. It looks like we're breaking through it, and if we break through this lower trend line, we broke through it back here in December, very briefly, and just barely broke through it over here in November. But, if we have a significant dip down below this trend line, it could really change the dynamic of the bull market. It would take quite a while to kind of get back up to its all-time highs. If we do follow this trend, Vechain should be trading in the 80 cent to $1 mark, by December. So let's just all hope and pray that the bull market is not over. So yeah, that's all I got for you guys today. We're just, keeping an eye on the markets. If anything comes up, if any major news or any major changes, I will put out a quick video to let you guys know what's happening. So hit the subscribe button, turn on notifications so you can get notified in the event of any breaking news. I keep major subscriptions to paid subscriptions to all of the cryptocurrency news outlets, and I am always watching them, and I receive immediate notifications. So I will definitely let you guys know if there's anything that you guys need to know. So with that said, have a good night, and yeah, tomorrow's another day.
Not to mention filled up and fully loaded pressure. Don't come, but I know you'll overcome. Why am I so confident? All of heaven got my back.